Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. Well, I am changing my rating on silver again from neutral back to buy. So let's get into it. This large long-term chart of silver tells you why I am making this change back to buy. And the reason is the potential here is enormous. Can it fail? Of course it can, but normally the bigger the pattern, the more reliable they are. And here, this big symmetrical triangle started in 2008. I had to count, so that's about a 17-year pattern. And it broke out in early 2024. And based on the base of this triangle, if you measure that and project it upwards, you get a $64 price projection, and we're currently at 30. So I'm changing my rating from a neutral to a buy. It also looks the same on the actual silver commodity chart. This is the ETF SLV. So we just want to take a look at this last 6, 7, 8 months right here. As I mentioned, silver is one of the most volatile metals, securities. Probably silver, natural gas, and maybe some crypto things are the most volatile. So you don't want to let your losers go too far because it could turn into a big, big, big loss. So that's why I've had a few changes here. So we initially went with a buy rating on January 15th at 27.96, right here. And then these confluence and moving averages were broken way up here on April 3rd at 28.89. And so prices went down as expected. It was a good call. And back we came. And as long as prices stayed below our cluster of moving averages, I was going to stay bearish on silver. But it was able to break out. I waited another day because from here to here was a big move. It was 3, 4%. I'd hate chasing things. The next day we got to pull back right to those moving averages, and we had a doji hammer, which is a uh, kind of a bullish pattern. And so from there, that was on April 6th, went to a buy rating. Prices went up nicely and then came down and broke the cluster of moving averages again at 29.12. So went to a neutral, took a slight loss. And then today, after a couple of days below, today we get a big pop higher, um, up to 30.22 is the close. And I'm going to get back on this train, excuse me, because the potential upside is so great. So that's kind of where we're at. And let's take a look at the point. As long as it stays above this 29.5, this cluster of moving averages, I'm okay. Oops, I'm going to put my stop down at 29 at the previous low that we had a few days ago to give it a little bit of room. So, but I don't want to see this 29.5 area violated either. So let's just take a look at the point and figure chart, which is the least subjective chart. These I draw, I calculate. A point and figure chart is strictly supply and demand. When it's going up, you get a row of X's, and when it comes down, you get a row of O's, and it's just showing you zeros. You're getting a O's. You're getting again, it's the least subjective chart you can get. What I like about this chart when I look at it is you got a bullish trend line, this blue upward slicing sloping trend line, suggesting that the trend is up. And we've got had a consolidation here for a while, maybe 6 or 7 months. And we met our price projection on this up move, but we got a double top here. If we get another, if prices are able to come up and get to that level and then break above that to the 32 area, we have a triple top breakout, which would be give us another higher price projection that could be significant. So, the big picture on silver is up. The tricky part of it is trying to manage the volatility and not take a big loss if you're wrong. So you got to cut bait on them at a very quick time. And anyway, I think we're in pretty good shape. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. Tell your family members, your friends. I think the advice has been pretty solid. Thank you. Have a great day.